Monday, September 19th, market analysis, Stan Ehrlich. Good morning, 8:22 California time. We have a down gap on Friday. Please remember, I keep saying this all the time, we've had lots of gaps lately as well. Gaps are almost always closed. I'd have to say around 90% of the time. Very, very likely that they're closed. And we're beginning to see this Friday down gap closed this morning. We'll get to the details in just a moment. Little quick review here on a longer term basis. Over here in the bottom left, we have had the COVID crash. Lasted only 1 month, but it was big. It started recuperating March of 2020. Long-term bull market, looked great, acted great, nothing really wrong. Few typical normal hiccups along the way, but finally at the beginning of 2022, specifically January 4th, the very beginning of the year, we had a high. Markets started to come down, and this is based on the spider, the SPY, S&P 500, started to come down, broke some lows from the previous 2 or 3 months earlier, but on the rally, it was not able to make any higher highs. Then it made some new lower lows for longer periods of time. That is an indication that something is turning bearish, which it did. Next rally didn't make any new highs for the trend, and the next time down it made another set of lower lows, ending up approximately April. So the next rally was up against resistance. It stopped. That little 9 days of pain was a little complicated in here. I nicknamed it 9 days of pain. And then gap down, and all of a sudden super oversold. Ended up being a low on June 17th in very oversold territory. This is my custom relative strength index. It's based on Wells Wilder's indicator. I learned RSI from Wells himself. This is my custom version. It's my favorite indicator, favorite oscillator. We bottomed out, started to rally back up, and now we're seeing a little bit of strength, higher highs over a few weeks time period. But finally, and not long ago, August 16th, a month ago, we hit a significant overbought condition up here on the RSI subgraph. The highest we've seen since was at November or October, early November of 21. We hadn't been that high on the RSI since, and it topped out again. Let's start zooming in here. So, this overbought condition also correlated very, very nicely with an upside objective off of a small head and shoulder bottom, which developed a first shoulder May 20, the head of the formation 617, the last shoulder low was July 14. The little line here is the neckline, got broken, minimum upside objective calculated on this date, July 15th, was supposed to get up to, I think it was 430, and the upside, the top of the rally I should say, was 431.73, just a little bit further than the minimum upside objective, and that's when it got very overbought, and that was the end of that. We started down, we even gapped down, came back up and tried to close the gap completely. It closed the gap mostly, but couldn't do the job completely. Too much selling pressure, and all of a sudden we have a gigantic bearish engulfing, and that was the nail in the coffin. Started to keep on going down, bottomed out a couple of weeks ago, a little bit oversold condition, rallied back up against resistance again, and then gapped down on Monday of last week. Tuesday bounce, Thursday down, Friday we gapped down. Now, today, we had an opening very close to the low of Friday. Didn't make a lower low. Friday's support held, wasn't much, didn't need to be, so it started a rally. Now we have closed the gap partially already this morning. And now I'm going to start zooming into 1 minute data. This has been daily, obviously. We are currently trading just a little below unchanged of several ticks. So basically it's unchanged. Okay, let's look at the 1 minute chart. Let me go back to the way I was. I'd like to keep things the way I like them. And on the 1 minute chart, here we go. Open this morning, significantly lower. Almost hit the low of Friday, the dashed green line. Not quite, missed by a very small amount. Immediately started to bounce back up again. Stalled out a little bit more bullish progress, a little more strength. And now we're getting higher than Friday's high. And that means we're starting to close the gap. But the gap is not closed yet. We've got to get all the way back up to... I don't think that's the low of Friday, and it is the low of Friday. The price would be, about 88.78, 388, 389 almost. We're 85 and a quarter. There's only about 4 points to go from where we are, and we're dipping back down somewhat. The high has closed the gap partially, but not completely. I am expecting it to close the gap completely. I expect that because it's normally what happens. That price level, again at around 89, let's call it, represents a good point to potentially buy some puts, or go short, or get out of longs, whatever. It's a selling point. New shorts, offset longs, variety of things you can do there. Anything that would be bearish might work out really well. I am bearish. I'm looking for 340 or lower in the next several months. Frankly, I think it's going to be spring, maybe even summer of next year, when this bear market finally bottoms out in earnest and starts a multi-year bull market again. At this point, I think the gap's going to be closed and we're going to turn down, and approximately 2 to 6 weeks from now, during the month of October, specifically during the month of October, I am expecting another low of some significance. Not the bottom of the bear market, but some low of significance. And that is because of the seasonal tendency, which is very strong. It's the October lows. I've been tracking it for decades. Well, at least 1 or 2 decades. This is a graphic. The green bars represent the October lows. The red we can eliminate. This is the EC Forecaster, my Ehrlich Cycle Finder electronic version. I invented the Ehrlich Cycle Finder in 1977. It's still available, amazingly enough. And this is the electronic version. So you can see that the green bars are during the month of October. The little green arrows are the exact low week. This is a weekly data chart, not daily. and they are in or very close to the month of October, which almost always, like 80 to maybe the low 90 percentile in the last 30 years, has contained an excellent buying opportunity. The bottom of some sort of a dip in a bull trend, maybe the bottom of a bear move of some substantial nature, and, well, it's very rare, but maybe the bottom of a bear market, which doesn't happen very often, so that's why it doesn't happen that often in October exactly. So in October, coming up in 2 to 6 weeks, I am expecting a low where, frankly, maybe down where the low was before at 362-ish, low 60s. That is my expectation, period. I think we're going to see a low somewhere in the low 360s, 20 points lower in 2 to 6 weeks. And then an excellent bounce. I will then start talking about the Santa Claus rally, another favorite of mine, another very high probability of making some money, and another seasonal tendency. So right now we're looking for the October lows. I'm bearish. First, let's close this darn gap, rally up in the next today maybe, or the next day or two, and finish the job, close the gap, and then it's going to turn down again in my opinion. Let's look at some futures charts. I got something brand new for you this morning. First of all, I'll mention the natural gas buy signal that I had on the 12th of September, worked for 2 days. Second out of the 2 days was an excellent rally, so there was plenty of opportunity for some very short-term profit. But on Thursday of last week and then on Friday it failed, and then finally made a lower low on Friday. And today we made another lower low early in the day, but it's starting to come back to a little bit higher on the day at the moment. There's a chance for a significant reversal. We'll see what happens. I don't have one yet. Heating oil. I do, at the moment, have a bullish engulfing. As long as it stays higher than Friday's closing price, the low today is lower than the previous day, which was Friday. Today's high is higher than Friday's high. Therefore, you have what's called an engulfing range. In the old days, it was called an outside trading range day. And because it is currently higher than Friday's high, we have a bullish engulfing. On top of that, look how low the relative strength index got earlier this morning, down to approximately 16, which is very low on a daily data chart, qualifying it for the Ehrlich reversal, or ER, bullish engulfing. My favorite signal. I'll point out that we had a bearish ER signal smack dab on the top of the market on June 17th. That's exactly where they are supposed to occur, at tops and bottoms of moves. We also had a beauty, a huge one, bearish engulfing March 9th of 22 in the heating oil. So we got a little track record going that's really great. There's one that did not work correctly, and that was a bearish engulfing on April 21. Very small loss on that. This shoulda, woulda, coulda been a very big profitable trade. And this was another very profitable trade, but for a short period of time. I have no way of knowing how long this is going to last, this signal, if it survives today, which I think it will. It may be only for a few days, it may be for months. The signal itself doesn't tell me how far up it's going to go, assuming, of course, it's a bullish engulfing, and how long it's going to take. There's lots of other tools that I use for that. For instance, it's good support that we're bouncing off of here in the 3.1 range. So that's in its favor for at least probably testing 4.0. And if that is broken on the upside, then we have the highest high for many months to challenge at 4.3. We'll see what happens. We'll track this signal and trade for as long as it lasts. And let's resize that for the moment. We have a previous bearish engulfing on the 10-year notes. smack dab on top of the rally. Again, that's where they're supposed to be. I don't always find them on the highest high and lowest low. It's just that the Ehrlich reversal, the ER signals, are built to reveal turning points the day they happen. This one's still in progress and still doing fantastically. It is approximately a 6.25 point profit. And again, the signal was on August 2nd, so this is a month and a half old. And never really challenged. There was never so far any rally of any significance. I also would like to point out, and I will, that there was a bearish engulfing smack dab on the top of the market, and we got short back in early August of 21. And this green line represents the trade until it was stopped out, and the yellow, the trailing stop. This is an automated, 100% automated trading system. It is not a black box. There are a few little secrets in here, but we allow you to change the rate at which the stop moves. We allow you to do a variety of things with the code for the ER signals. And I'll go to our other commodity charts. I'm not seeing anything worth talking about this morning, so we'll pass on the rest. But the brand new signal is a bullish engulfing in heating oil. Bonds, oversold. ER signals turns it yellow, but that's not a signal, it's a warning that we might get a signal any day, and frankly maybe today. Not so far. The last one was around the same levels, and that was on June 16th. It did very, very well. We have a new sell signal smack on top recently, August 2nd. That's what the trading system's built for, picking turning points. So I think there's a chance a double bottom may occur. Can't say that yet, but hey, we're here, we're oversold. Let's see what happens. I'm not saying it will, I'm just saying there's a chance. Resizing that, and I goofed. I shouldn't have done that. Okay, so I showed you the October lows, bonds, some futures, going back to my index workspace, and I see we're sinking a little bit more at the moment on the spider. I'd like to see that gap close. That would be much more common a situation. I am noticing, that's interesting, that the DIA has closed its gap just a few minutes ago, half an hour ago maybe. That's done. The gap is closed in the DIA, past tense. There's no gap to close in the QQQ. That's done. There was a little gap. Also, the Russell 2000, it did not close its gap completely like the spider, but the DIA did, and very accurately. So, being a bear on the average, I do think that we're going to see new lows for the trend this week, as we almost saw this morning so far. Now, the DIA made a new low by a very small amount, turned around, came back up, closed the gap, and now is sinking to lower on the day again. Looking for lower lows this week, almost assuredly. I think the gap's going to be closed again on the spider, and maybe the 2000 as well. Not quite sure about that one, but I think so in the spider. And I'll leave you with this morning's commentary about the major indexes, the new signal that we found so far doing okay, and the heating oil. So signing off, Stan Ehrlich. Have a great trading day.